Well, good morning and welcome back to the FEG tax package for 2022. Sometimes I wish the IRS would understand the confusion they created in words, but that is that is not their job. They just create tax codes. So inside of the world of Roths, and we're talking about tax planning strategies now, right? So we went through the building blocks, and if you've missed those videos, please, please, please go to fegtaxpack.com, P-A-C-K, and get signed up. We'll get you the videos that you have missed to make sure that you're able to process all of them. It is a building block where there's some learning that comes along each and every week. We went through the basics or fundamentals, how to read your return, things to look for 2022, and now we're into some of the strategies. We talked about bracket bumping. We talked about the double stack. Now we're going to talk about Rothing and the two C's. So Roths were created back in 1997, so they've been around for a while. Effective January 1 of 1998, you could put money into a Roth. Put money in means contribute. That contribution was limited by your adjusted gross income. So again, this became, and actually MAGI, modified adjustment gross income, and it became very confusing to people. One, it was a small amount of money, so most financial people didn't care about it. Most custodians didn't want the accounts because it was such a small amount of money that was going in. And there's a litany of accounts that the IRS has said, here's a great idea, that financial institutions said, no, it's not. Not that it's not good for the taxpayer, it's just too small for us to make any profit off of, so we won't worry about it. And that comes from the largest of custodians. And Roths were kind of deemed that way in the very beginning. So in 1998, you could put in a limited amount of money. It seems like it was $2,000 a year. But your adjusted gross income, MAGI, modified, had to be below a certain adjusted gross income level. If I remember, it was $160,000. And if your income was below that, whether you had a 401k or not, you had to have earned income, but you could contribute up to that $2,000 amount in 98, 99 into your Roth IRAs. Now, little by little, that number's increased. Today, in 2022, it's $7,000 if you're over 50. It's $6,000 if you're under. But there's still a modified adjustment gross income limit as to whether or not you can contribute. You have to have earned income. You can be any age. But your AGI, modified adjustment gross income, has to be below a certain level. So many people that we take care of simply are incapable of contributing, not because they don't have the money, but not contributing because their tax return says their MAGI, their adjusted gross income, is simply too high. That doesn't mean the Roth is out the door. Now, going back in the time machine again, and understanding some of the history of this, because there's a lot of conflicting data that's out there. In 97, the Roth concept was created. 98's the first year you could do it. And you could actually convert inside of a traditional IRA to a Roth IRA back in 1998. But your adjusted gross income had to be limited to $100,000 of income, and that included the conversion amount. So a lot of people didn't do it. You made $90,000, right? You could only convert $10,000. It wasn't worth the headache, the challenge, the problem. And again, most people in my world, in the financial services world, simply didn't talk to people about it. Now, along the way, the amounts you could put in increased. And suddenly in 2007, and some people won't care about this, but it's important to me. In 2007, in the middle of the year, we got a tax memo from the IRS. I'm sure you got it too, just joking. This is what you pay us for if we're your fiduciary. But in 2007, we got a tax memo saying effective January 1 of 2010, 3 years from then, that you could convert IRA to Roth IRA regardless of your adjusted gross income limit. Now that was a beautiful thing. Took a lot of people by surprise. And we began to do tons and tons of prep work in 07, 08, and 09 to prepare to do those conversions in 2010. Today, I'm proud to say we have over $70 million now of Roth money that we were able to help people create during that period of time when you were allowed to do it, especially when recharacterizations were allowed. Now, it is true, recharacterizations ended You can no longer do those. You can't put money in a Roth, oops, change my mind, and take it back to an IRA unless it happens to be an over contribution, not a conversion. So the IRS will take away opportunities from time to time. It's our job to find new ones, new strategies, new things. But in the meantime, you can still do conversions. And a conversion is where you take money that's in an IRA or a Roth at this point in time in life, or a 401k rather, at this point in time in life, and say, I want to convert it to an IRA. And to a Roth IRA. So you pay the taxes. There is no penalty. You can do this at any age. I think my oldest conversion was for somebody 92, right? So there is no age on the upper end. And the younger age, if you have IRA money, you should always convert because you're probably in a lower tax rate today than you're going to ever be. But you take that money and you put it inside of the Roth. You do have to pay full income tax. So think about your marginal rate. Whatever your marginal rate, that highest dollar you're going to pay taxes on, that money will be added to your tax return. There is no penalty. But if you're in the 10% bracket, right? Let's say you're a college student and you have money from a 401k from working in the summer or an IRA that was tax deferred, and you convert it to a Roth, you likely are going to pay zero in taxes. But even if you did, it's a 10% conversion. 10% of the amount that you converted that you would owe to the IRS, but that money is going to be tax-free forever. That's the power of the Roth. When you go to retire, people always ask me, what percentage is the objective? What's the goal? How do I win the game? It's a great question. Ideally, in my mind, you're at about 20% that's tax deferred. And 40% of both taxable, exposed to the IRS, and 40% that's tax-free. For those of you that are 65 and over, it's very, very difficult to get there because you just didn't have the Roth opportunity long enough. So I am very proud when I get people to a third, a third, and a third. The majority of people who come to see us truly have 80% or more tax deferred 9 times out of 10. Unless they sold a business, sold a farm, most of us have 80% of our exposure all based on what the IRS decides to do next. You would never do that with your investments. Why in the world would you do it with the IRS? There is a better strategy, but you need to understand it is tax planning. Go back to our videos if you've missed them. I think this is 6 or 7 or 8 in the series of where we are. You can go back and go to FEG Tax Pack. It's PACK.com. Get signed up or call 833 Tax Pack. And we'll send you out get you caught up, if you will, in the videos. Take them one at a time. Don't try to take all of these in. I taught this stuff to Purdue students, seniors, for 14 years, people who getting a 4-year degree in financial planning. And learning tax is not simple. I told them that it is much easier for me to teach somebody to invest than it is to understand the U.S. tax code, which is very, very fluid. Changes happen all of the time. And there's many, many nuances. So don't get overwhelmed. Take them one at a time and just build on them. But make sure you get it done by the end of the year. Tax planning ends December 31st, and then you start over. Your tax return, when you do that report, is a one-hit wonder. Let's not get it wrong. Anything that we can do to improve your financial journey, we want to do that. So a few things for you to do. 1, watch the videos. You can go to FEGTaxPack.com, get signed up for the previous ones. 2, you can call 833 Tax Pack. Talk to Brittany. Make sure you get on the list if you're not computer savvy, or talk to her about a next steps meeting. That's where you sit down for a complimentary meeting with somebody on our team. We will give you things based on your unique situation that you can consider today, things you're going to want to consider in the future, and if we choose to partner together, what FEG will do for you, and we will put it into writing. Again, that's either yourlifeafterwork.com, 800-928-4001, or 833 Tax Pack. More than happy to talk to you. Have a great week. You are almost graduated from the Tax Planning Package 2022. Again, congratulations. We'll see you next week.